Welcome. In this video, will Xcn Bullish wave come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most prominent structures observed on the chart is the downward trend that the price has been moving within for a long time. This structure is a classic technical formation that shows sellers have held control of the market for a certain period, and every attempt at an upward move has fallen short of the previous high. However, in the current outlook, strong signals are beginning to emerge that this downtrend may be coming to an end. The price is now moving very close to the upper band of this descending trend and is applying upward pressure with stronger momentum compared to previous attempts. This suggests that a breakout from the trend may be very near. Descending trend structures generally form in pressured markets and are often seen during times of investor indecision. However, every downtrend also carries the potential for a reversal. This is because the price movements within these structures eventually become compressed, leading to a breakout. Especially as the price approaches the trend line, an increase in trading volume can be observed, indicating that buyers may be stepping in and are on the verge of breaking the downward pressure. An upward breakout at this point could signal not just a short-term price increase, but also the beginning of an entirely new upward trend. The current proximity of the price to the downward trend line suggests that a critical technical threshold is being approached. If this line is broken to the upside, a significant psychological barrier in the market will have been surpassed. This is because descending trend lines are not just a visual formation on a chart, they also symbolize investor psychology, confidence, and expectations. A breakout above this line would be a clear signal that confidence in the market is rising and buyers are starting to dominate. A breakout of a downward trend usually signals the beginning of a new phase for investors. These breakouts represent a fundamental shift in the market structure. Previously dominant selling behavior is gradually replaced by buying activity. When such a technical structure is broken, strong buying is often observed in a short amount of time. Especially after the trend line is broken, a retest or pullback typically follows, creating new buying opportunities and allowing buyers to enter positions with confidence. This enables the price to gain momentum and continue rising. Furthermore, after trend breakouts, investors generally begin to target larger objectives. Using the commonly applied measured move technique in technical analysis, potential targets can be calculated by adding the distance between the starting and ending points of the broken downtrend to the breakout level. This helps investors strategically determine direction and also serves as evidence that market sentiment is shifting in a positive direction. Especially when the breakout is supported by volume, it is seen as a signal of a safe and strong trend beginning. Another important indicator at this point is the number of touches on the trend line. The more times the price has touched a descending trend line, the stronger that trend line is considered to be. The break of such a strong trend line produces more impactful and lasting results. In the current situation, the price has touched this trend line multiple times and now appears ready to break upward through the pressure. In technical analysis, this is referred to as weakening resistance. In other words, sellers who lose a bit more strength with each test may eventually give up, allowing the price to rise rapidly without major resistance. In addition, a noticeable improvement in overall market sentiment is often observed following a breakout. Increasingly positive comments on social media platforms, news outlets, and investor forums show that this rise reflects not only a technical change but also a psychological one. In other words, investors begin taking positions with an expectation of upward movement rather than a continuation of the downtrend. This leads the market into an upward cycle. But we can't base our analysis solely on trends. Let's also take a look at other metrics. Stay tuned. One of the most notable structures on the chart is that past price movements have been characterized by lower lows and lower highs. This pattern indicated that the market had been under the control of sellers for a long time, with each upward attempt falling short of the previous high. However, that scenario may now be starting to change. Recent price action contains very encouraging signs suggesting that the previous downtrend structure may be on the verge of breaking. In particular, the latest move, where the price has now broken the pattern of lower highs by forming a higher high, can be considered a very strong signal that a transformation in market structure is beginning. In technical analysis, this is one of the first and most important signs of a trend reversal. When an asset in a downtrend first breaks the sequence of lower highs by making a higher high, and then during the following pullback manages to form a higher low, this structure is taken as confirmation that an uptrend has started. Right now, we are at this exact critical stage. For the first time, the price has managed to form a higher high compared to the previous downward series. This higher high shows that buyers are starting to show renewed interest in the market and that selling pressure is weakening. The next low that forms after this stage is extremely important. If this low stays above the previous one, it is called a higher low and signifies that the market direction has changed, indicating the start of an uptrend. Such patterns carry important signals not only from a technical perspective, but also in terms of investor psychology. Investors may have lost confidence in the market due to the repeated pattern of lower lows and lower highs in the past. But now, with a higher high forming on the chart and the potential for a higher low to follow, this marks a very critical threshold in the rebuilding of that confidence. In these kinds of reversal structures, experienced investors tend to monitor the market closely, and if a second higher low forms, the tendency to open positions increases. In the current situation, the most recent higher high made by the price is quite significant, as this high may have been supported by closes above previous peak levels. This suggests that the breakout may be sustainable. If the new low that forms now does not drop below the previous low, that is, if the price manages to hold above that level, a clear structure of higher lows and higher highs will have formed on the chart. This is a structure that confirms the official start of an uptrend. These types of formations generally indicate that the market has transitioned into one of the healthiest and most sustainable upward trends, known as the higher high, higher low sequence. A higher high structure plays a very important role not just in technical analysis, but also in trading strategies. Many investors base their buy decisions on such reversal formations. Positions captured at the beginning of trend reversals especially offer significant return potential for investors. Therefore, the current price movement may not only be indicating the end of the previous trend, but also the initial steps of a new and strong uptrend. The current low being formed by the price should be watched closely in this context, because this area, the new low level, is one of the most critical zones where the uptrend will become clear and investor decisions will be shaped. If this area, meaning the new low, forms above the previous one, it strongly indicates that the downtrend has ended and that buyers are starting to take full control. In this case, saying that the downtrend has ended becomes technically much more reliable. During this process, the most important point for investors is to patiently follow the price movements and observe the positioning of the new low that will form. The MACD indicator is an important momentum indicator frequently used by traders in technical analysis, offering powerful clues about market direction. This indicator is characterized by its ability to measure the momentum of price movements while at the same time anticipating potential trend reversals or trend strengthening. The structure exhibited by the MACD on the current chart points to quite remarkable potential. Especially at this point, the MACD lines are converging on the upside and the possibility of a crossover is increasing, indicating that buyers are becoming increasingly influential in the market. If these two lines make a clear intersection on the upside, this could have extremely positive consequences for price movements. This potential upside intersection of the MACD with the signal line is often interpreted by traders as a buy signal. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.